For this week's show, we again have a star-studded lineup of guests. So to introduce them, once again, I'd like to hand over to Jochen Staiger, founder and chief editor of Commodity TV. A warm welcome to Jochen.
Andrew, thank you very much, and always delighted to be again the moderator. I think you're always already for the fourth time to do that. Yes, as you said, my name is Jochen Staiger. I'm the chief editor and founder of Commodity TV and Rohstoff TV. And yeah, let's make it again a great session as we had in the past already. And this week's show features two exciting mining projects. One is silver with Kevin Drover, president and CEO of Aurcana Resources. And the other one is lithium with Farhad Abasov of Millennial Lithium. A newly launched royalty and streaming business with Davidson, the CEO of Trident Resources. And we have two leading investors with over 50 years experience in the mining business. But guys, you actually do not look that old. I think it's the combined experience. Willem, Middelkoop, the founder of Commodity Discovery Fund out of the Netherlands, and the fund primarily invested in Canadian listed mining and exploration companies. And also we have Phil Hopwood, the president of KWR Capital, a private equity fund investing in natural resources. Before KWR Capital, Phil worked for Deloitte for just under 25 years, where he rose to the position of global mining and metals leader. Yeah, before we really start with presentations, we have changed a little bit the script. And first up in a new segment, let's review the key mining news stories of the last few weeks that have caught our panelists' eyes. I would like to ask our two investors, Phil and Willem, can you pick out one mining news story over the last 2 weeks, please, that has caught your attention? And I would love to start with Phil and then afterwards Willem. So Phil, the floor is yours, please.
Okay, I'll give you one. It's somewhat controversial. The story that I saw recently that really resonated was the Rio Tinto destroying the 45,000-year-old Aboriginal cave in West Australia. Now let's go for the big stuff straight away, shall we? Mm-hmm. I mean, that was so interesting, and I got texts and I got messages from people who are outside of the mining sector asking what is all that about, and without sort of commenting on that and the like. It just shows you the importance of that whole ESG agenda in the mining sector, and people are watching us all the time in mining. So that would be my takeaway at the moment.
Okay, wow, great. That was short. And Willem, what was your take, please?
I can go longer, Jochen, if you like.
No, that's fine.
Well, actually, I would like to point to the ongoing battle between the paper gold market and the physical gold market. We've seen huge volatility on the COMEX markets. HSBC reported a huge loss. Scotia Bank, which have been in a billion banks since the 1800s, has decided to totally quit bullion dealing. So I think that this is one of the most important stories out there, and we see a huge inflow into the gold ETFs. So I think this is the reason why gold is jumping higher and higher.
Great. And maybe you want to give us a gold price target until the end of the year?
Well, I better quote Bank of America. Bank of America, one of the big boys on Wall Street. You know, normally they were very negative on gold, but and they all started to promote gold actually, and they now have a price target of $3,000 within 12 to 18 months, and that tells the story.
Let's hope that's not a contraindicator, but maybe they have sucked up in the last years a lot of physical material, so now they can hopefully release it. Okay, super. Thank you very much. Thanks for that. And so let's move on to our first mining update of the show, and it is on silver. But before we do that, let's bring up our first interactive poll. Mina, can you please bring that up so that our participants can see that? Is silver a good investment in 2020? Please poll for it. So whilst you are voting, let me introduce Kevin Drover, President and CEO of Aurcana Resources. Kevin has more than 40 years of both domestic and international experience in operations, project development, management, and process re-engineering with both developing and producing companies. And the company Aurcana Corporation is a Vancouver-based company, and the shares are listed on the TSX Venture Exchange. Okay, now let's see. What are the results of the poll? Can we end that? Okay, that was quite obvious. It's yes with 63%, and I see it also. Wow, don't know. Are you sure that you are on the right investment space? Okay. All right, then let's end the poll, please. And share the results. Voila, that's good. Okie dokie. So we have that. Let's get rid of that. Thank you. All right, Kevin, I would say the floor is yours. Please give us an insight into your great company.
Thanks, Jochen, and glad to be here, everybody. Well, Aurcana is a silver company. We own the Revenue Virginius mine in Colorado, in southwest Colorado. It's a prior producing mine, polymetallic, but primary silver, gold, with some lead and zinc byproduct credits. We're fully permitted, historical mining district. We have a strong social license there with the community, environmental NGOs, and local and state governments. We've done exceptionally well in that environment there. It's reserves. We have a reserve of 21 million ounces. Existing mine and mill infrastructure is in place. We're in the process of getting it back into production right now. In addition, we have another mine, fully permitted milling facility on the project as well, located in Texas. So we're in a very stable jurisdiction right now in continental United States. We're fully permitted at both operations. The Revenue Virginius mine is very, very close to production, only 7 months away from fully funded to first production, 9 months to positive cash flow. Precious metal hard rock mine with byproduct credits, feasibility complete, done by SRK. $8 an ounce silver cost, all in sustaining. Existing mine and mill infrastructure, and great exploration upside. So I'll stop there.
Super, thank you very much. Also to our audience, if you have any questions, please put it in the chat or use the raising hand in the chat function. And it is in the participant function. If you do so, and Mina can also can allow you to speak. But my first question, Willem, what do you think of silver as an investment, of course? And also, do you have any thoughts on Aurcana resources or questions to Kevin, please?
Yeah, actually, I like silver. We always had a exposure to silver, but we scaled it back in recent years because I learned over the last 20 years that silver is always lagging gold. So first, I want to see gold break out, and then we move back into silver. And that's what we've done in the last few months. We increased our silver position from 3% to 10%. We participate in 3 private placements with Aurcana. These were done at extremely low levels with a warrant. So we made quite a bit of money on Aurcana. So and I think that speaks about the great chance you have in the mining industry if you put money at work very at the low point of the cycle. The returns are fabulous. This April after the crash in March, we had our best monthly return ever. It was 39% monthly return. So if these markets move, if these companies start to move, the returns are impressive.
Fantastic. Phil, are you also positive on silver? And do you have any questions to Kevin, please?
Yeah, I like silver. I like it. I collect it. Hey, there we are. Look at that. That's a 1 ounce of silver. I prefer that though, which that's gold. Yeah. So I like it. I like to say collect it, but silver can disappoint, as we all know. That's been the problem with it. But what I do like about silver is when I look at supply and demand, I can see there is a lack of supply for silver, and people have not been building silver mines for, goodness knows for how long, and so. So not only have you got the Aurcana story going on there, you've also got the guys in Australia, silver mines in Australia, who've just raised $12 million for their investment. Mount Carrington, I think it is. So people are moving back into silver. I think there's an upside, but will that be the 1-to-40 ratio, or will that be the 1-to-80 ratio? A $22 an ounce price of silver. Seems, I think, a fair estimate in the near term, I would suggest.
Great.
Hey, but I also thought it was going to be $10,000 a ton for copper. So, you know, don't trust me.
That will come for sure. Kevin, I have a question for you. You are constructing a silver mine in Colorado. So how is Colorado as a mining jurisdiction on the one hand? And do you think, let's assume Trump will lose in November. Do you think that would have any impact because he is very mining friendly?
Yeah, you know, Colorado has a long mining industry or history. Our mine is located in southwest Colorado in the San Juan Mountains. Over the last 150 years, there's been over 3,000 mines that have operated over that particular period. You know, so people down there, they understand mining, they know mining. Locally, we enjoy some really good community support, state, local officials, county officials. You know, we feel Colorado is a great place to do business, and it's an excellent mining jurisdiction. As for the politics, oh boy, it's that's a tough one, you know. But I think we as miners, we've got to, you know, as long as we can extract these metals environmentally, sustainably, responsibly, and economically, I think we should be fine. You know, the political flavor of the day is going to change, but there's not a lot we can do with those kinds of things. We just have to kind of, I think, stay focused on what we can control in the world.
Super. What would you say? Why should somebody invest in Aurcana? What makes your company, let's call it sexy? And your share price hit it in May at 52 weeks high. So do you think it's, let's say, too late to invest and we have to wait until it comes down again? Or why do you think now is the time to really have a close look onto your company?
Well, I think anybody who's considering investing us is lucky that it's only at 60 cents right now. And I think one of the best times to buy a mining stock is just before you go into production. If you look at us, I mean, we're almost a call option on the price of silver. We're 7 months to production. We're one of the highest grade, if not the highest grade, arguably, in the world, certainly with a proven and probable reserve. You know, so it's, I think it's a good time with the price of silver looking to take a run, with us 7 months to production. It's a good time to get into the silver play, and I think Aurcana is a really good place to start. The other thing too, you know, gold, as gold gets more expensive, you get silver becomes the poor man's gold, and they tend to jump in. So I think that's one of the things that support it. But the other side of silver is that it has practical uses in today's world, photovoltaic and things like that. So you get good, as the price of silver goes up, I think we've got some underlying support for it as well, as the economy and whatnot starts to get a little bit better.
As you are going into production, and there is there's a question from Enyo, and where does your debt financing stand? Well, that was also my question. What's the financer looking? Do you need additional money, or are you fine to really go in production?
Well, we feel that we've done our equity piece that we needed to do. We started out needing about $37 million US to put this mine back into production. So we've gone out, we've raised about $20 million over the last 6 months, and we still have about just over 8 million US in the bank. And we're doing a lot of things down at the site right now. We feel 30 million would give us comfort of debt to put this back into production, somewhere between 25 and $30 million. We've been engaged with a number of different funds over the last several months. The COVID certainly has cramped our style a little bit and delayed the due diligence visits and things like that. But we are progressing. We're finding ways around all of that. Some of the companies we're dealing with are you know, hiring locally engineering firms to do due diligence and whatnot. So we're very hopeful that we're going to get our financing in place relatively soon, as a matter of fact.
Okay, super. Maybe Phil and Willem, you want to participate again?
Well, actually, we have a bunch of warrants which are in the money now. So we're exercising the warrants as we speak this week. So this brings some new money coming in because the shares are higher now. So then it's always interesting for investors to exercise the warrant rights, and then you get the shares, and you can always sell them at a higher price, because we focus on two areas of the mining cycle. One is the discovery phase. As you know, once an exploration company makes a great discovery, the value of the company jumps. But there's a second phase in the mining cycle, which is very interesting, and that's when the production starts. And we play that part of the cycle as well. So we always have a list in our office of the next 10, 20 companies which will start production in the next 2 to 3 years. And normally, Kevin is right, you should enter the stock 6 months before production starts. There's always a little risk involved, so don't put all your eggs in one basket. But on average, the valuation of companies who start production, they jump between, well, 100, 200, 300% on average, especially in bull markets.
Yeah. Just to add to that, Willem, right now we have about $24 million Canadian that are in the money on the warrants, and that's being started to be exercised as well. We're seeing some money coming in.
Yeah, if I make a comment. So you talk about investors, investing in some of these assets. So one of the things, so one of my learnings is in the last few months, there's a lot of people wanting to invest in this sector. Some of them are actually from outside the sector. And the problem is that we are mining as an industry, we are a quirky industry, we're eccentric, and people have lost their shirts investing in mining in the past. And one of the problems is we start with pictures which show great pictures of ore bodies and locations and maps and the like. So by the way, this is not related to anybody on this call, of course, but that's what we do. Well, what the investors want to know is how much money can we make, and how will you guarantee that I'm going to make 10, 15, 20% on this investment? By the way, I think that's one of the reasons why the royalties and the streamers get a lot of good press these days, because people kind of know what kind of returns they're going to get from that. And
yeah, but look at the valuation. Huh? The valuation is so rich down there.
Yeah, that's it. That's it. So I think it's like that language and how we sort of attract investment into the market is something that we really need to think about. And so we've been doing a lot of thinking around that in KWR Capital, and it seems like transparency, but also working back for the investors. How will we make you money? That's what people want to hear. I think that's one of the reasons why you've seen the growth in private equity primarily as well.
That's right. Super. What's your take on the silver price? Final question here, Kevin, for this year, maybe next year?
Oh, it's going to be higher.
Very detailed.
My crystal ball doesn't give me, the timing and the exact amount, but I think we're going to have a good run on silver here. I really do.
Yeah.
Okay. Super.
So Jochen, one thing I like about silver as well as gold is I like when I know I've got my all-in sustaining cost, which is, by the way, also applies to silver. Like, I know what my costs are in silver. So I think one of the reasons why the gold miners in particular have got investment back into them is because people can kind of compare apples with apples, and they know that with $1,700 an ounce, if my all-in sustaining cost is even $1,100, I'm going to make money from it.
And so, look, Jochen, look at the current inflow in silver ETFs. If you annualize the current inflow in silver ETFs, every ounce of silver which will be mined this year will be bought by silver ETFs. And as you know, 50–60% of all silver is needed for the industry. So it's a matter of time before we'll have a physical shortage of silver. Actually, we've done a study in-house. In the last 50 years, the physical demand was every year higher than world silver mine production. So it's the fundamentals are looking wonderful.
I agree.
Yeah, that's right. And also maybe one detail from my side, which is very interesting. If you go on plug-in e-vehicles and hybrids and cars like that, which are becoming more and more popular in the next, let's say, 5 to 10 years, it's really interesting because you need twice to 3 times more the amount of silver for the circuits alone. And then you have also silver in the batteries in the circuits. So I know a survey which says like probably 2025, they think of approximately 50 to 100 million ounces additional demand for silver. So I think it's getting tight in the market, and I'm also a total silver bull, to be honest. Yeah, absolutely. Great. All right, Kevin, thank you very much for that great presentation. And yeah, we have our second poll of the day here. Mina, can you bring that up, please? Do you currently hold royalty and streaming companies? We want to know from our audience. And yeah, please vote. And while you guys are voting, yeah, I want to move on a little bit here. Someone is arguing that you should be holding not just royalty and streaming companies in your portfolio, but investing in Trident Resources, soon to be renamed in Trident Royalties. We have here Adam Davidson, and Adam has over 10 years of experience in the natural resources sector, most recently with Resource Capital Funds, a leading mining-focused private equity firm. Trident Resources IPO'd on the AIM exchange of the London Stock Exchange this week under the ticker TRR. So, Mina, okay, can you please show us the results? Whoa, that's very close. At least 48% do own streaming and royalty companies. Well done, I would say. There are a lot of good companies out there. And I would say over to you, Adam, to give us an insight into your royalty business, please.
Yep, sure. Yeah, that's a very interesting poll response. Well, yeah, as you mentioned, Trident, we're a new royalty and streaming company, and we did just list on the AIM market in London this week. And we did so in conjunction with closing our equity financing, which was for £16 million, so just a touch over 20 million US. And then just yesterday, we formally closed on our first royalty transaction, which was a royalty, a 1.5% FOB royalty over part of the Deception Pit of MinRes's Cooleenabing iron ore mine in Western Australia. So this transaction, which is a currently paying royalty, was done with Trident's original cash on hand. So that sets us up pretty nicely then to comfortably cover our G&A for the foreseeable future, which really then allows us to utilize the full amount of this recent raise to execute on additional transactions and start building the portfolio, which is really what generates the sort of returns that royalty companies get, is building that critical mass. But actually, let me take a step back and outline Trident's strategy. So royalty companies are, well, they're very well understood model on the TSX, particularly in the precious metal space. And I guess what we saw is an opportunity to build a truly diversified mining royalty portfolio, which the intent is over time will broadly reflect the global mining sector by commodity. So this will provide investors with almost an index fund-like approach with regards to commodity diversification, but obviously from a royalty perspective, which then still provides some of the benefits of investing directly in miners. So what we've found, I guess, particularly with generalist and retail investors and sort of non-mining specific groups, is that you can extol all the virtues of royalties, you know, the fact that they get top-line exposure to mining assets, they benefit from that asset level upside, so throughput expansion, mine life extension, you know, exploration upside, and all that obviously at no additional cost to the royalty holder. You know, it's done with equities money effectively. You know, they're non-dilutive, often secured, and provide direct exposure to the underlying commodities. So you can pitch that and people get it, but then ultimately the question is, yeah, if I want to get a 4 or 5% allocation in my portfolio to mining commodities, I like the royalty approach. So how do I get that exposure? And I guess what we want to ultimately provide investors is the ability to hold a single share of Trident and get that full exposure to the full suite of mining commodities, but from a royalty perspective. Now, obviously, out of the gate, we'll be prioritizing the most accretive transactions, but that's the long-term sort of strategy. So, yeah, I think we're well on our way, having completed the listing this week and the fundraise, in addition to closing on that first transaction. So, really, from our perspective, I guess the handcuffs are off, and it's sort of time to roll up our sleeves and get to work building the portfolio.
Okay, thank you very much, Adam. Phil, first question. Do you have any questions for Adam? And also, what are your thoughts on royalty and streaming? Do you like it?
Yeah, so royalties and streamers. So in Canada, I'm based here in Canada. It would have been interesting to see the result of that poll if it was just on a Canadian poll, because I think it would be much higher, because they're part of the fabric of the Canadian mining system. And I think they're an increasingly large part of the fabric of major finance. And I think it's so interesting, by the way, Adam, that you actually got a successful royalty stream there in Australia. which in the past, I mean, if you go back, say, 10 years or so, wasn't hostile to it, but it just didn't want to kind of be part of that. But now you've got a lot more streams coming out of Australia. So they're part of it. The only issue I have with it is, and the question that I have is, what type of returns do you reckon you're going to be getting from that stream there, Adam?
Yeah, so from that particular, because that's a very good question. The Canadian guys for big precious deals in North America, I mean, having been on the other side of the table, you can see that their returns are compressed, I guess, and in some cases loss leading, but they're looking towards resource conversion and mine life extension to really get their returns. Yeah. So we don't, when it comes to precious metals, it's going to be more competitive. I think we'll be looking at sort of smaller to mid-sized assets and outside North America, quite frankly, initially. But nevertheless, precious is going to be tighter on the return perspective. But something like that particular royalty, maybe a bit of background is helpful. So it was one of these types of royalties that was spun out of an M&A, sort of 10 years previous. The junior that held it in Australia, like a lot of these royalties, it was sort of a face-saving exercise where you retain a royalty in case the thing ever does get into production. Then lo and behold, MinRes starts mining it. And these guys are sitting there with a royalty that had been sort of in the bottom drawer. So they can either monetize it today and do what they want to do with the capital, which, they're pursuing battery minerals in the Pilbara. So they're just not a natural holder. It's not a non-core asset for them. So from our perspective, it's more suitable sitting in a royalty vehicle, and you're going to get higher returns than a precious, than a precious royalty. So from our perspective, that's a post-tax sort of plus 20% type return, obviously highly dependent on throughput and iron ore prices, which are holding up stronger than we were originally modeling. But it's those types of returns for non-precious that we'd be shooting for.
Mm-hmm. Okay.
So it's interesting. So you've got a question there, Jochen, was asking about the crowded out effect. More competitive, more streamers.
Exactly.
I think where Adam is doing something quite interesting there is it is actually in a part of the market where it's the smaller mining companies. So a lot of the streamers, the royalty companies, they've kind of gone towards the bigger side, like the Franco-Nevadas. The big companies, the Cobra Panamas, and people like that. And I mean, we still have a real issue in the market with investment. I mean, people are interested. There's a lot of people kicking the tires, and I think there's a real market there for the $50 million market capitalization companies wanting, they'll give out royalties on their companies to get some finance and streams and the like, because I mean, investment is still a big issue. That's why I'm so heartened when I see in the last few weeks, White Rock Minerals in Australia. I think they raised about $7 million. I've already mentioned Silver Mines. That's 12. Perseus, they did that Exor, Perseus Mining in Australia. They did a $60 million acquisition there with Exor in Africa, $60 million. So there's a lot of money starting to move around, which is heartening to see. Sorry, Jochen.
Thank you. There's also a question here. Is Trident focused mostly on royalties? Are you looking for any streaming deals? And also a question here from the audience. Do you have any preferred jurisdictions?
Yeah, so we'll look at streams as well. Obviously, there's a bit of a structural component to the company to facilitate that. So it's sort of a bit more of on a case-by-case basis. But yeah, we'll look at royalties and streams. And sorry, what was the second question?
Do you have any favorite jurisdictions?
Oh, jurisdictions. Yeah, so we're jurisdictionally agnostic. We'll look anywhere, and quite intentionally so. If you overlay most of the peers, they are listed in North America for the most part, with the exception of Anglo-Pac. So quite naturally, when you overlay them on a map, it's very heavy North America weighting and kind of trickles into Central South America, and then kind of a smattering across the rest of the globe. But as Philip flagged, a place like Australia, massive mining jurisdiction, no publicly listed royalty companies in existence yet, but hundreds of existing royalties and every opportunity to write new ones. So there are certain jurisdictions like Australia that we see as sort of clear targets of opportunity.
Fantastic. I have also questions which is quite actual. As we know, for example, Osisko gold royalties had, of course, some problems through the shutdown of the Canadian Malartic mine, which is their largest asset. So what would happen if, let's assume we have a second wave with COVID-19 and your royalty investments have to shut down? Can you survive that?
Well, I mean, and that's well, part of the emphasis of building a portfolio is to be able to weather those sort of storms. But in general, you're sort of taking that risk on the upfront when you're putting the money in. So something like Cooley-Nubbing, for example, you've got a well-capitalized major that operates it. So Minres, has I think about $1 billion in the bank from their sell down of Wodgina. They're allocated 120 million Aussie to expand throughput at Cooley-Nubbing from 11 million tons a year to 15 million tons. So, which will push them down the cost curve. So you look at the defensiveness of the asset is obviously a pretty critical component when we're doing RTP.
Fantastic. Willem, do you have a question to Adam?
Well, not a question, but we invest quite a bit into royalty plays. I must say that royalty companies, streaming companies, are a bit the flavor of the month. In mining, we see quite strong trends. A few years ago, everybody wanted to be a cobalt exploration company. Then we had a lithium run. And now everybody wants to start a royalty company. Actually, this is the second royalty company, new royalty company, which is being promoted to me this week. And we have invested quite a bit of money into the senior royalty plays in April, end of March, early April, because these are the first to recover after a crash like we've seen in March. Royal Gold, Franco-Nevada, they all had a huge run. We sold most of our royalty holdings in the last 2 weeks. So we like the business, we like the model, but if you study the valuations, you pay 6 times earnings, 60, 70, 80 times the earnings compared to if you go to a, let's say Eldorado Gold, a gold producer, it's 10 times earnings. So the valuations is quite stretched. And it's an interesting space. But you shouldn't load up only with the royalty plays. But for a fund like ours, it's a great place to store money. There's a lot of liquidity. You can move in and out with quite some money.
Fantastic. Do we have any questions from the audience? Not that I see now. Okay. Yeah, how easy is it for you now these days with travel restrictions and all that stuff to source deals and of course to do proper due diligence? And because I mean to do only like a remote due diligence, I think this is not something you should maybe fully rely on, right?
Yeah, I mean it obviously it creates its challenges as you'd expect. Something like our first transaction, for example. We weren't, well, it was an existing royalty and it didn't have rights to visit the operation. That said, there's a lot of info in the public domain. So that's an executable transaction. So I think, it restricts you, but that said, I think we've got enough deal flow at the moment because I think as Philip flagged earlier that these things run in cycles and there's a time where private equity and royalty companies can deploy a lot of capital and then times where the public markets will be deploying a lot of capital. And right now, I think given the state of the world we're in, it's a ripe time for royalty companies to be putting money out the door on long life assets. So we've got enough inbound, and then when you do filter out those that you just have to get to site, that there's still enough for us to be pretty busy.
We saw also from your website that you won't invest in thermal coal. Is that due to ESG, climate change, or what are concerns? What's the reason for that?
Yeah, I mean, the reality is it increasingly closes you off to certain pools of capital. So it was those ESG concerns and a really practical perspective on how we want to grow the company and getting access to those pools of capital they're critical.
And how important is ESG as part of your investment criteria?
Yeah, I mean, it's important for the same reasons. As a royalty holder, you're sort of one step removed. But that doesn't mean you don't have to do the work. So it's a critical consideration because again, it all comes back to, there's obviously the altruistic reasons, but it comes back to the fact that it can close you off to a certain investor class or pools of capital and ultimately can be incredibly damaging to your business if you invest in something that has a checkered reputation. So it has to be a consideration.
Fantastic. Last question also from my side. Could you imagine, let's move a little bit further down the road. Let's assume you get a lot of really successful royalties and streams. And could you imagine to pay in the future also dividends to reward shareholders?
Yeah, absolutely. I mean, Yeah, that's the ultimate objective is building the critical mass, because you don't get that. You know, we were quite deliberate that when we did this last financing, it was at 20p, which was the same price as the original shell. So despite the fact that we brought in a team and built a strategy, done our first acquisition and built a pipeline, we were trying not to get cute with the sort of share price. So we're, you know, I think there's a lot of re-rating and you know, increased valuation that investors who get in now could enjoy, but ultimately where you want to get to is a few years down the track, the point where you're paying a healthy dividend once you've built the critical mass in the portfolio.
Mm-hmm. Like to hear that, because, you know, I'm Swiss German. We love dividends, definitely. Super, Adam. Thank you very much. Very compelling, and good luck to your start now, and really get it done, because the mining universe needs a lot of more financing and stuff. We need more of that, definitely. Yeah. Many thanks to you, Adam. And now, Mina, can you bring up our third poll of the day? How optimistic are you about lithium as an investment? Now we are switching to not the flavor of the month, to the flavor of this decade, with batteries and with energy metals and future e-mobility metals. Yeah. Oh, wow. Jesus, 50-50. Okay. That's interesting. And while you are doing that,
I think we have the wrong question.
No,
Sorry,
I know. It's just a bit fiddly. Sorry. It's done.
Okay.
No, now we have it. Please now vote, ladies and gentlemen. Whilst you are voting, let me introduce our third mining update. It's Millennial Lithium. And Millennial Lithium, who I know extremely well, is focused on the development of its flagship lithium brine project, Pastos Grandes, situated in the province of Salta in Argentina. It's the CEO is Farhad Abasov, and he will speak to you in a second. And Farhad and myself, we know each other a good, I would say 10 years already. And he is really a really successful guy. And I have a good feeling that he does the same stuff now with Millennial. So what's the polling here? Okie dokie. So let's end the poll and show the results. So quite optimistic, 30%, very optimistic, 20%. That's not too bad, I would say. Oh, very pessimistic. Those must be the people who still drive diesel. Okie dokie, like that. Fantastic. So let's stop that here. And I would suggest, Farhad, the floor is yours, please.
Thank you, Jochen, and thanks, everyone. As Jochen said, we have a project, which is a lithium brine project in Salta province of Argentina. It is probably one of the most advanced development projects right now. We've finished the feasibility study. We have reserves enough to produce about 24,000 tons of lithium carbonate of battery grade for 40 years. And we probably have one of the lowest cost structure projects as well. So our operating costs are going to be around $3,400 per ton. We're also looking at this situation, whereas we can start the construction probably in the next few months, depending obviously on the COVID situation. Right now we have a very strong cash position among all our peers. I would say we got about $20 million in Canadian dollars and in the bank, so that will allow us to continue with our current operations. Basically, we've been doing pilot processing. We've built solar evaporation ponds, the alignment plant. We're also finishing now, and soon we'll commission our processing plant as well. So I would say we're probably best positioned once the market recovers after COVID, and obviously, the EV sales recover with it. We'll be probably one of those few lithium projects that's still, left standing, so to speak, after the lithium price decline in the last 2 years. So going forward, I think in the next few months, we'll be able to actually finish our funding. We already have a very strong strategic partner and investor from China. It's a large solar power company out of China. They own about 17%. So they will be also a part of the overall funding package going forward. So I think, we're at the point where the lithium price has reached a level where it's either below or equal to margin cost of production for many hard rock producers. So, and that will probably serve as a floor price for lithium. And hence, I think that whatever project that's going to get funded and built in the next few years will be most likely lithium brine projects because of their lower cost structure. Okay, that's it, Jochen. I'll take questions.
Thank you, Farhad. Yeah, great. Phil, over to you. Are you a lithium investor? And I'm pretty sure you have a question for Farhad.
No, I'm not. No, I'm not. It's not that I'm not down on lithium necessarily, but like the reason why I like silver and I like gold and I like copper is because I understand the supply and demand, and lithium it's been quite a wild ride over the last few years. By the way, I'm so interested, Farhad, in your comments there, Ed. You've actually created you've got a company, an asset where basically you can withstand shocks to the price. So yeah, absolutely, that's the right language you have to have these days in lithium, because I just don't understand the lithium market. But having said that, I really do believe in the electric vehicle story and the batteries as well. So there's a great story, but you are talking to somebody who invested in one graphite company, bought in at $3, and it's now worth 29 cents. So yeah, I worry about lithium, to be honest, but I prefer the brine lithium to the alternatives to flake.
Yeah, that's a good point. The situation in lithium supply demand is quite complex in that, well, maybe it's actually pretty black and white. It's an oligopolistic situation, has been like that for quite a while. And what happened in the last couple of years, that once all of these car companies have made their plans public, that they're shifting to EVs, we had oversupply situation because a lot of hard rock producers in Australia basically took their projects through construction to production pretty fast. But what happens since then is that obviously that oversupply led to lower lithium price. So in the next few months, we're going to see quite a bit of a constraint on supply side. I mean, we've already witnessed substantial cancellations, delays, both in South America and in Australia. And of course, in Quebec, Canada, where one of the companies went belly up as well. So that is going to have its impact on lithium price in the next few months. That's certainly by early 2021 when we're going to see the upward pressure on lithium price. Right now, lithium price has come down to about $6,500 per ton. That means that if you look at the entire landscape, only brine projects can survive. So the reason I mentioned the hard rock producers' cost of production is that they produce and supply almost 45% of the world's lithium. So you can't just easily take them out of equation. So they have to continue their operations. That means that the price cannot be lower than $6,000 per ton for too long. That's not sustainable. So that's why I think, in order to meet that demand, and we're talking about doubling, if not trebling that demand from now until 2025, we need probably about roughly 20 mines of Millennial's project. So that's a tall order. And for these projects to get funded, obviously you have to have a very stable lithium price, but at the same time, you have to have projects that can actually produce profitably, even at lower lithium price, such as we're experiencing right now. So I agree with you. I mean, it's not as easy to decipher as precious metals, but I think it's definitely entrenched trend in terms of EV adoption. And if you look at pre-COVID numbers in Europe and most large West European countries, UK, France, Germany, and Italy, EV sales were up by 80 to 90% year on year in the first quarter. So obviously it will take time for all of this to recover after COVID, but once it's back to normal or quasi-normal, I think EV sales will be strong again.
Great, thank you, Farhad. Even I'm driving a hybrid now using lithium. Right?
That I cannot believe.
Yeah, exactly, it is. Willem, what are your thoughts on the electric vehicle markets? And I think you wrote a book called The Tesla Revolution a few years ago. So you must be quite positive on lithium, right?
Yeah, and I'm driving, I've been driving a Tesla for 5 years, but actually we're not that positive on lithium because we concentrate on metals, which will see production deficits in the next 10 years. And if you look at lithium, there's no shortage of lithium in the world. There's so much lithium around. There was a production deficit in lithium, and that was the reason why the price spiked in the last few years. It has come down quite a bit, so I think Farhad is right. We can wait for a breakout to the upside. But I think we won't see an incredible run of lithium again because there's some overcapacity now, and as I said, there's enough lithium around. And I think you can double world lithium production by investing, let's say, 6-7 billion. You can double world lithium production, and for 6-7 billion, you can just open one copper mine. So that's why we concentrate on copper, because copper will be a great beneficiary as well of the whole Tesla, the whole EV revolution.
Mm-hmm. That brings me on to a question to you, Farhad, and I think we should talk maybe some numbers. First of all, what are your current capital costs in Argentina? And also maybe can you comment a bit on the results of your studies, meaning, because I think this is the tipping point for the future lithium production. I mean, it does not help if you have a hard rock project, which costs you $8,000 or $9,000 a ton in the production, and you can sell it for $9,000. That makes no sense to produce, right? But if you can produce, like, let's say for $3,000, $3,500, then you make money still, and this is a viable project. So can you give us some more insight in your project, please?
Yeah, that's a very important point, Jochen, because if you look at the structure of the industry right now, so roughly half the world's lithium comes from South America, the other half from Australia. I'm kind of exaggerating it, the opposite production somewhere else. But if you look at actually what happens in reality on the ground, basically in Australia, the deposits are hard rock. But they never produce end product in Australia. So what they do, they turn it into a concentrate with 6% lithium in it, and then they ship it to China for further processing. So basically, the conversion into end product, the lithium carbonate or lithium hydroxide, happens actually in China. So if you look at the entire chain of production costs there, mining costs in Australia, shipping to China, and then of course final conversion in China, we're looking at between probably $7,000 and $10,000 per ton, depending obviously on the company. If you now look at the situation in South America, Chile and Argentina, actually there are 4 companies operating, two companies in each country. They produce end products in country. So in other words, be it lithium carbonate or hydroxide or any other product actually gets produced there. And because it's a brine project, because we basically, what we do, we pump the brine back up to the surface, and we go through solar evaporation ponds and then processing, the operating costs are much lower. We're looking at about between $2,000 and $4,000 per ton range between Chile and Argentina. So SPM would be producing probably around $2,000 per ton, while the highest cost producer in Argentina will be around $4,500 per ton. So as you mentioned, Jochen, and emphasized that point correctly, is that even if we're in production today, producing at the highest end of operating costs in South America, which is $4,500 per ton, would still be making money. Unlike the lowest cost producer in Australia, for example. So that's a big advantage. Now, there's also obviously a drawback to some of these SLRs, because some of these evaporation pond production centers is that it takes time before you get to production. That's why you saw a lot more production coming online in Australia, because it's much easier to ramp up there. However, once you are in production, obviously, in the long term, these projects, the brine projects, are more sustainable and more profitable. So that's why we think in the next few months, when things change, when there's, as Willem mentioned, there's more demand for investment in new lithium projects, that will most likely be flowing in the direction of South America. Having said that, I mean, I think Phil mentioned the lack of investment in mining sector in general. It's not that easy, even for entrenched, established producers in the lithium sector, to actually raise capital and build these projects. So I don't think, Willem, it will be easy to put or find even $5-6 billion in the next few years. It will be a real race, and I think investors will be a lot more selective than they have been so far in terms of lithium, cobalt, and other projects. They will be really looking at cost structure more than just because the particular commodity became a hot commodity. So that's how we see things, and that's why I think we're best positioned in terms of what we have in the bank, what we've done with the project. Obviously, I didn't talk about the team, but one of the most experienced technical teams on the ground as well, and one of the probably best mining jurisdictions, not only in Argentina but in South America, which is the province of Salta. Those factors contribute to the strength of the project.
Yeah, can you also comment, because you just said it, your jurisdiction, Argentina, there was a new government recently elected. And can you comment, please, on, let's say, on the federal side and also on the provincial side? How is it going with permitting? How is the attitude towards mining and especially lithium brines?
So the mining jurisdiction in Argentina actually resides at the provincial level. So in other words, we deal with provincial authorities, provincial government in terms of permitting, licenses, and so forth. So we almost never deal with federal government, although we did have to obviously deal with them when we received our fiscal stability certificate. Basically, that fixes all our fiscal obligations to different layers of the government as of the time of application. So that was an important document for us because it basically removes all potential volatility and all potential uncertainties and risk as far as royalties, corporate tax, and so forth. And in terms of federal government, yes, they had the presidential elections last October. Left of the center government got into power now. So there's still a few questions as to how they're going to behave, how they're going to handle the certain current economic situation or economic turmoil, I should say, in Argentina. But one positive thing about this government, about the president, is that they've been making right noises about mining and energy in general. So they realize that this is the main kind of hard currency earner for the country. So we had communication with them this week, whereas the federal government is open to work with mining companies on a case-by-case basis to actually relieve them from certain fiscal obligations and also help them with currency exchange controls and so forth. So I think they're on the right track in that regard. However, the most important thing as far as Argentina is concerned is, of course, how the provincial governments behave. And Salta has got a very solid reputation in terms of mining because, I've done another project there before, almost 10 years ago, and I've dealt with at least 3 different governments in the province, and all of them, although they were from different ends of this political spectrum, they've always been supportive of mining. And that's, I think, very important, the stability of the regime. And that's why we think that, places like Salta, will be able to attract quite a bit of foreign direct investment. And we've seen that, one of the fewest, new projects, lithium projects in the world was actually Orocobre in a neighboring province of Jujuy in Argentina a few years back. With the help of Toyota, they actually put that project into production. So there are good things about the province. The country obviously is going through some difficulties, and we're continuously working with them to make sure that those things do not have any negative impact on us.
Mm-hmm. Super. Thank you very much, Farhad. Great. Before we are closing 5 at 5, I would like to ask our 2 investors whether you have one prediction for the mining industry you would like to share with us for the next 12 months. And maybe Willem can start first and then Phil.
Well, I think it's not that much of a surprise, but the bull market has clearly started. And if you look back, I think the correction in commodities, especially in precious metals, it ended early 2016. We've seen a first recovery in 2016. It was like a full start almost. Then we've seen a fallback in 2017, 18, 19. But now we see a strong breakout in gold. Silver will follow. But more important, we're commodity discovery fund, so we're more general commodity investors. If you look at the broader commodity space, we've seen a decline of the CRB commodity index by 75% from 2008 till, April this year. I can't imagine the commodity index going deeper than what we've seen in the last few months. There's a strong recovery now. We also started to invest in companies like BHP, even THAKE Resources, the broader producers. They're still quite cheap, Rio Tinto as well. If you look at a company like THAKE Resources, investors always think they will go broke when there's a commodity low, and then you can buy them for next to nothing, and then in the bull market they always go from $3-4 to $20-30. So these are wonderful gains to be made in quite a safe way. So don't ignore the producers, don't ignore the bigger players in the commodity space.
Mm-hmm. Thanks, Phil.
Okay, I'm going to give you 2 actually, two comments here. One is, and I'm not a gold bull at all, right? But I'm a big believer in gold right now because I think after post-COVID, the world is going to be in a lot more debt, and I think we are going to see a return of inflation. And so that makes gold a great hedge against inflation. So cash in the bank is not going to be your friend, I would suggest, in a year's time. I might be wrong, but so I think gold as a hedge is going to be good. And also tax. We all know we're going to be paying a lot more tax in the next few years. We just are. And that will also apply then to anybody who's making some money from royalties or whatever you're doing, gold producers, silver producers and the like. I think there's going to be a lot of governments all around the world hitting the mining sector to increase their tax takes. And we've already seen that in some jurisdictions, haven't we? Like in South America and the like. So I think that's it. But I think volatility is going to be that real constant. And I'll give you something interesting as well, by the way, if I might, Jochen, on the ESG side. So ESG is going to become even more important, I would suggest. And somebody who people on the call might want to follow and see, because he's really interesting and he's been very influential in this sector. Have you people come across Adam Matthews? Andrew, we've had a chat about him before. So Adam Matthews, he's the co-chair of the Transition Pathway Initiative, moving people away from fossil fuels and the like, very involved in this sector. Very interesting. So he's almost like a thought leader on ESG and the like.
Great.
Okay.
There's a question again to Willem. Willem, why do you think we have right now the turning point in mining equity?
Because the valuation reached a 100-year low compared to financial assets or broader assets. And it's such an amazing opportunity that because we're on the verge of a huge rise in inflation, we're on the verge of a huge rise of money creation. We're also on the verge of a new decade or new era in which we'll see shortages of certain metals. Palladium is the best example. Palladium price jumped by 400% in the last 3 years because there's a physical shortage in the palladium market now. And if you combine all these circumstances, there's a perfect storm coming. And then the valuation are at the 100-year low. So this is a truly once in a lifetime opportunity. And we've been in this business. I've been in this business for almost 20 years. Our fund has been around for 12 years. I was stupid enough to start a commodity fund at the top of the previous commodity cycle in 2008. We rode all the way down, but I'm looking forward to the next 5 to 10 to 15 years. I think there are fortunes to be made. And like I said, a 40% return in 1 month, that's amazing, but that shows what's possible now.
Great. Maybe also questions to you guys. How do you think, let's say, about all those developments with solar, with wind power, with e-mobility, with hydrogen, buses, whatever, let's say public transportation really changing to hydrogen and also to e-transportation. How do you think this will affect over the next 5 to 10 years the, let's say commodity markets on the one hand, and on the other hand, do we not have too less mines to really fulfill the demand in the world?
Yeah, I would absolutely agree. I mean, I would echo Willem's comments though. I mean, when you see the prices, like you mentioned BHP there before, and BHP is like $35 at the moment. Have you seen what the iron ore price is right now? And they're unreal, and they're churning out profits right now. So, but one of the problems in this market is we have scared off the investors, right? So if you're a mining investor in the mining industry, you understand the quirkiness, I'll say the eccentricity sometimes of how we operate, right? And so the issue is, how do you get investors back into this market who haven't necessarily been in? And so many of them in the past have been burned. They've come from, say, fisheries and the like, where they've made their billions of dollars, supplying seafood. I can give you examples of that. And they've been burnt by people like, with, interesting commodities. You mentioned hydrogen, in the middle of nowhere and the like, and this is going to make a fortune, and then of course it doesn't. So what we have to do is get better at telling our story about how we can make our investors money. That's basically the gold producers got to do that, the developers. And then you'll get people investing more in this head, because people can see the profits there. they can see the opportunity in it, and people want to invest more in this sector, I would suggest.
Willem, you want to comment?
Yeah, well, if we look at all these revolutions, the technical revolutions, the EV revolutions, the change from fossil energy to the alternatives, they all need copper. And another metal which is very interesting is platinum. We've seen a huge run in palladium because palladium is needed and used for exhaust systems in cars. But platinum is needed for hydrogen fuel cells. Fuel cell cars will be another revolution, maybe not for the smaller cars, but for the trucks and maybe even ships. I think the fuel cell revolution will start. And we need platinum, 1 ounce of platinum for each fuel cell. So that's an interesting development. So that's something we watch. There are huge problems in the production of platinum in South Africa. South Africa is the main exporter of platinum. But copper will do well. We're not a big believer in cobalt anymore because cobalt, there are too many problems on the ESG level. So companies like Tesla are trying to phase out cobalt from their chemistry, battery chemistry. And nickel will benefit from this. So a lot more nickel, quality nickel will be needed. And that's also an interesting metal for the next decade, I think.
Okay, super. Well then, thank you very much. It's 7 o'clock and I think we can close down now. Andrew, I hand it back to you. Thanks to Kevin, thanks to Farhad, Phil and Willem for taking the time and discussing those interesting themes.
Well, again, once again, many thanks to Jochen. Many thanks to our guests for this week. Our next episode in this time zone will be at 5 p.m. British Summer Time on the 18th of June with another star-studded lineup. And we also have our EMA Americas online event on the 30th of June to the 2nd of July, featuring keynotes from investors such as Frank Holmes, miners such as Anglo American, and out-of-box addresses such as the head of space exploration mining at NASA. For more details, just drop me a line. Until then, stay safe. Thank you very much. And
thank you very much. Bye-bye. Take care, guys. Bye-bye.